It is. It is. It's actually if you look at the price of Ren the last week, it's becoming very obvious. Wrapped BTC, Curve Finance, all these guys are. I mean, Ren moved $25 million in BTC over to Ethereum in one day. That's just staggering. I think this is going to grow exponentially. This is really what blockchain was meant for. If when you think about it, decentralized finance. If you just look at the root word, what we're talking about is it's your traditional banking system, but decentralized. And not just that, your traditional banking system. Why can't I wire money at 2 a.m. at night? Why can't I get a small micro loan anytime I want? Why is the market even down on the weekends? Right? People who trade in stock markets are used to trading 5 days a week, and on the weekend it's closed. But the decentralized market isn't like that. It's always on, right? If you needed a flash loan to pay for a hospital bill or something, you couldn't really do it on the weekend. It's just ridiculous, actually. So a lot of money is moving in here, and people are discovering that there are ways to create really good financial products in DeFi, right? So the better financial products are. That's what yield farming is all about, is people taking large chunks of money and moving it around to wherever they can find the most ROI. So we need the cross-chain because unfortunately, the way it already is that all of the assets are sitting on Ethereum. You know, billions and billions of dollars worth of assets now on Ethereum. And then as in Liechtenstein, now you can tokenize anything with the new blockchain act. So you're basically going to get tokenized gold, tokenized oil, tokenize everything on the blockchain. So Ethereum is just going to have so much value sitting on the chain there that we have to figure out, okay, how do we connect to them? Because that value is fluid. So if there are better opportunities over on our side, then they'll move it here. I have a side project I can talk about where we want to take musicians' royalties. So you look at a musician, they have a set income because they have royalties. And so they can take a loan out backed against their royalties. So that's a really good thing because someone will lend to them because they'll see a good cash flow and they'll say, okay, well, I'll give you a loan for like 7%. 7% is pretty much quite a bit. So if we get a 7% interest rate, then people are going to move their money here, lend it to the artists on Elastos, for example. So that kind of stuff is definitely possible. We need that bridge though, because if they can't move their money here, then they can't take advantage of the products we build over here.